This morning, the government released its most current information on the rate of inflation, revealing through the CPI that inflationary pressures are starting to subside. The Consumer Price Index increased by just 0.1% for the month, and that brought the annual level down from 4.9% to 4%. This makes it an almost certainty that the Federal Reserve will implement a rate hike pause and announce that tomorrow. Hello, traders. Gary Wagner here. It is 11:20 in Honolulu, 5:20 in New York on Tuesday, 13th day of June, 2023, and this is the Daily Report for gold and silver. Gold declined by $12.50 or 0.65%, with the most active August contract currently fixed at $1,956.90. Because the CPI report today showed that inflation rates are declining, and simultaneously the Federal Reserve, while they're going to pause interest rate hikes, are going to keep them elevated, could have a continued bearish effect on gold and silver pricing. We know that when we look at our daily chart, which I have up right now, we can see that the lows have been defined by the 100-day moving average and the most recent highs over, let's say, the last week and a half by the 50-day moving average. A break below this particular price point, meaning the 100-day moving average, puts our next logical level of technical support between $1,900 and $1,905. That is the 38.2 Fibonacci retracement. The data set is a fairly long one going back to November of last year, with gold at 1,620 up to the high of the year, just shy of the all-time record high at 2,083. I would not be surprised to see gold either trade sideways or under more pressure unless some fundamental event changes the outlook. The dollar also declined by 0.34%, taking the index to 103.28. I also believe that we could see pressure in the dollar with the dollar index moving lower. We identified a beginning of a rounded top, which I believe has pretty much completed, and we have seen the dollar index move to lower values, currently at 103.28. That's after trading to a low of just about 103 in trading today. And our next support level, should the dollar continue to trade under pressure, has to be based on the 100-day moving average, which is currently fixed at 102.838. Below that, the 50-day moving average at 102.38. It is also noteworthy to compress the chart to take a look at when we saw these moving averages cross. If we go back to, say, 2021, towards the end of the year, we were in what is called bullish alignment when we compare the 100-day moving average to the 50-day. The lowest value would be the longer-term moving average in bullish alignment, with the 50-day or the shorter term being higher than that. We saw that occur up until the dollar index ran to 114.69. That is the high that came in approximately October of last year. And from there, we saw a price decline down to just around 100. You can see that with these bottoms right here. Now, from that point, we saw the dollar index move back up. However, the moving averages themselves, where we see them really widening here, and that means that the downtrend is strengthening, begin to contract and have a smaller distance in between them until we hit a bottom roughly in April of this year. And now it appears as though they could actually be expanding, which would definitely be a technical indication of lower value. My personal take is that we could see the dollar index easily move back to 102. Silver declined by 1.32% or 32 cents, taking the most active July contract to $23.73. As you know, we just pulled profits for our subscribers trading silver when our stop was hit, resulting in a profit of approximately $3,100 per COMEX contract. Currently, we have silver at $23.73. It is trading in Australia. It did trade lower today with the lowest low since hitting this top, up at around 24.60, which corresponds to the 50-day moving average. If we continue to see a price decline, the areas that I would look at for technical support have to be first the 100-day moving average, and that comes in at $23.46, and the 50% fib retracement at $23.18, with the brass ring or major support equaling this low here, which came in roughly below $23 per ounce. We will remain neutral with no active trades in gold or silver. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.